We're going to move into a review of the last year's M&A market, as well as predictions for the next year. First up is Jenny Heinzen, owner of Jenny Heinzen Real Estate. She and her family own a premier vineyard advisory and management company, plus a vineyard in Paso, Robles. She'll be followed by Pat Roney, CEO and founding partner of Vintage Wine Estates, which was formed with the merger of Roney's Girard Winery and Windsor Vineyards in 2007. Since then, the portfolio has grown to include iconic fine wine estates and powerful retail brands. Jenny, I am going to hand the floor over to you.
Great, thank you. So this is an exciting time for wine mergers and acquisitions on the Central Coast. We've had a lot of activity and we've got a lot to talk about today, so I'm excited. This presentation is an overview that includes recent transactions. Let me skip ahead here. There we go. Okay. Recent transactions, the who's who. We'll talk about vineyard values, water's influence on those values, and we'll also talk about what the future will likely bring. So there's essentially been four primary types of buyers. The large wine companies in general are reorganizing with new strategies. Portfolio wine companies are smart marketers who know how to sell wine. They are doing very well, and typically they own a variety of brands that have a sense of place. And at the conclusion of my presentation, we get to hear firsthand from Pat Roney, the CEO of Vintage Wine Company. So looking forward to hearing what he has to say. And then a very active group of buyers have been ag investors. They currently have a significant amount of dry powder with a sharp pencil, and they are definitely actively buying vineyards. Lifestyle investors, another segment, is extremely active since COVID. People are just looking to escape into the idyllic vineyard dream. So pre-COVID, I was getting maybe 3 calls a month from this type of buyer, and now these inquiries come in almost daily. So it's definitely a big spike in lifestyle buyers. So this slide just gives you a sense of who's invested and active in M&A on the Central Coast. And when COVID began, people kept asking me, are there still buyers out there? And there were a lot of active buyers even throughout COVID or at the beginning. And now I'm happy to report that there's proof of these buyers and a variety of closed transactions that we'll talk about. So first we're going to cover the relevant transactions, the most recent, but then we'll go back 18 months. And since May, there's been 3 significant deals in the range of 10 to 100 million plus. And there's also several more deals in the pipeline for the Central Coast. And then we'll also go over half a dozen smaller deals that were in the $1 to $10 million range. So Booker, this is a super fun and very interesting deal. It was completed last month. Zapponi and Company did a fantastic job of pulling together this extremely complex deal with Constellation Brands. They were working on this for a very long time, and it's a real boon to the west side of Paso Robles and will definitely help increase the recognition of the region. And I've got a quote here from Eric Jensen, Booker's founder. He said, "I couldn't be more excited. Together with Constellation, we're going to bring the best wines from Paso Robles to American consumers." And then just before that, there was a highly confidential project that hit the tax records to the tune of 120 million. This was over 7,000 acres and a variety of properties, and they were all in the Shandon area east of Paso Robles. And the underlying capital was originally an LLC controlled by Harvard Endowment Fund, and now the fund or the LLC is linked to a pension fund in Canada. And the important thing here is that the management in Shandon remains the same. It's all still the same local people that are involved. And then Treasury sold their Cat Canyon vineyard. So after a pause in the second quarter, this deal crossed the finish line in mid-May. The buyer is a very savvy local investor and had an innovative lender. And this lender is fairly new to the Central Coast and happy to have a foothold here. And this transacted for $18 million, which calculates out to about 21,000 a vineyard acre. Some of those acres were fallow, and a lot of them do need replants, so it's a little bit of an older vineyard there. And now we're going to talk about a few deals that happened pre-COVID. Niven family, based in the Edna Valley of San Luis Obispo County, sold a 100,000 case portfolio of brands to Northern California-based WX Brands. And WX was founded in 1999. And they also own Chronic Cellars in Paso Robles. And the company is a venture capital-backed company with 7 partners. Bonnie Doon was another very fun deal. This one also closed in January 2020, around the same time as the Niven deal. And the initial impact of coronavirus and the loss of restaurants was devastating for this brand, but they've successfully rebounded with key placements in Whole Foods and exports to South Korea. And War Room Cellars is the purchaser of this brand. They're a diverse cast of characters, a very sharp group of people, and I encourage you to check out their website. And Letitia Winery, this was a very significant deal for the Central Coast, and we'll be hearing more on this from Mr. Roney. And these are additional transactions that were in the $1 to $10 million range. The first transaction on this list was purchased. This transaction happened during COVID, and it was purchased by a neighboring winery who appears to have paid an assemblage premium compared to comps in the area. It's currently a walnut orchard primarily. They do plan to plant it to vineyard, but the sale comes out to about $50,000. They paid about $50,000 per plantable acre. And the remainder of the transactions on this list, I was involved with representing either the buyer or seller, or in one case, both. Few things to point out here. Luna Mata Vineyard, that was sold to Dow. They are a neighbor up there on Dow Mountain, so it'd be exciting to see what happens with that property. Rabbit Ridge Winery sold Vista Serrano, and then Armor Ridge Vineyard on this list here, that was the same buyer as Treasury's Cat Canyon Vineyard. So that buyer owns quite a bit of vineyard land currently in the Central Coast. And here's some of the pending transactions. This first one here I'm working on and hope to get it closed in a few weeks. So I'll be reporting that in my newsletter and on my website. The second one is a large Paso Robles vineyard. That one's scheduled to close at the end of the year. Third one here, the Monterey County. This is my listing that we should be getting done next week. So hopefully in time for harvest, so the buyers can harvest that. And there's also 2 Paso Robles wineries that are in escrow, so hopefully those deals will get done. And then, of course, Gallo's purchase of a variety of Constellation brands. It's expected to close next year at $1 billion total. And both companies claim to be fully committed to closing that transaction, so stay tuned on that one. I just wanted to highlight a few current opportunities, give you a sense of what's available. The first one here is the lifestyle package with good income. It's a beautiful home, vineyard, and boutique winery. The second one is Ken's Vault facility, and let's help Ken retire. Let's get this one sold. It would make a great custom crush or incubator wine brand facility. It's on the Fox and Canyon Trail in Santa Barbara. And then the third one on this list is the epicenter of the Shandon institutional vineyards. And this one's being offered at less than $15,000 a vineyard acre. It's a fixer-upper, but it's a really good value. And moving on, let's see here. So price per acre on vineyards on the Central Coast is still similar to 2018, 2019. In 2020, we're probably going to end up around an average of about $50,000 per planted vineyard acre, which is similar to the pricing in Santa Barbara County per vineyard acre. And then the east side of Paso Robles is in the range of about $30,000 per planted vineyard acre. And that tends to track with Monterey County. So I have another slide here to just show you that this range in the past 10 years has widened. That value range has really widened. There's a lot of diversity, and it's important to have people on your team that understand and can help you or understand what contributes to these variables. And one of the big variables here is water. So on the Central Coast, the vineyards here depend on a single water source, which is wells. In the Central Valley, they have district water, and that's kind of a different situation than what we have. So on the east side of Paso Robles, there's become a big difference in land value for vested, which is already irrigated agriculture that's in place versus non-vested. And that's most likely not going to change. There's just a lot more value for irrigated land in East Paso Robles. And then pending the groundwater sustainability plan adoption by the state, that will definitely influence land values as well in the future. So what will this next chapter bring? We'll continue to see a lot of sales activity, it seems like. There's a lot in the pipeline, as we talked about. There's this whole return to the homestead with the lifestyle buyer spike, large companies shifting brands around, and then these institutional investors with a big pool of money. There is a lot of money out there for those investors right now. And then a big factor that I think we need to start talking about is scarcity. High quality Central Coast vineyard land is predominantly planted out, and due to current and forecasted limitations on agriculture or irrigated agriculture, that is going to become even more scarce. I put this in here just to show you that the interest rates are amazing right now. And several positives, of course, are the interest rates, 3.5% for a 30-year fixed ag loan. That's the best I've seen in my 20-year career. And then the wine industry and on the Central Coast, it has appeal compared to potatoes in Idaho. So part of the reason that institutional investors are attracted and others is the value, and the vineyards here can pencil, and wineries and wine brands, they can be profitable. So new investors in the vineyard space translates to higher quality replants. So overall, I think we're going to see a quality increase on the Central Coast. And then there's a lot of opportunities now for startup and incubator type brands, boutique size. And then, of course, the vineyard lifestyle, more popular than ever. So in closing, I just wanted to say, welcome the opportunity to discuss the market as it relates to your situation. Please give me a call. If we're not a fit for each other, I'm happy to share resources or set up a referral to an M&A company or to another broker. And most of you, I think, are on my newsletter list already. But if you're not, sign up at jennyheinzen.com for market updates. And then to complete our M&A discussion, you now get to hear from a wine business leader with extensive experience and wisdom, Mr. Pat Roney. Thank you.
Hi, everybody. How are you today? I did talk a little bit about M&A activity from the perspective of vintage wine estates. In terms of today, what we're going to talk about is a little bit of the history of our company so you can get an idea of what we've done. Mergers and acquisitions where we see trends and opportunities, how things are happening on the private equity side of the market. M&A during COVID, what to do when you're considering a sell, and then how we as a company look at acquisitions internally. Just a bit of a background, I've been kind of kicking around the industry longer than I want to admit. Started as a sommelier at the Pump Room in Chicago and worked my way up and been president of a couple of different wineries. And we started Vintage Wine Estates with Gerard right during the Great Recession in 2000 and continued to grow the company since then. To give you a little idea of our acquisition history, this gives you kind of an overview of the wineries that we have acquired over the last 15 years. And basically, we have done in the last 4.5 years, we've done 22 acquisitions. And we expect to do some additional acquisitions. And we've looked at, obviously, we're in Napa and Sonoma. We've been moving down into the Central Coast and up into Oregon and Washington. And we kind of take a range on our wines from basically from $10 a bottle to $150. In terms of our growth rate over the last 15 years, we've grown about 28% compounded annual growth rate over the last several years, which is from organic growth internally as well as acquisitions. And in terms of the trends today, you'll continue to see a consolidation of wine companies. It's getting harder and harder as a small standalone winery wholesale channel of the business, and you can see where total companies have gone from 25% of total sales to 45 for the major companies. And then in 2019, the top three represented almost 56% of shipments. Vintage wine estates were really tiny, at just less than 1% of the total California wine business. And I think that not only are we seeing consolidation on the winery side and the retailer side, the distributor consolidations are what are creating the most pressure for wineries to consolidate. And you look at it today versus 25 years ago when there were 10 choices for distributors, major distributors in California, now down to 2.5, depending on how you look at it. And then the top major distributor groups actually continue to consolidate their business with Young's R&DC merger and the Southern. And I think really what you're going to see over the next 2 years is a continued shaking out of where those major distributors are just not going to represent as many of the wineries that they're currently doing today. On the flip side of that, the premium wine market continues to grow, and that makes it beneficial for acquisitions and people looking at it. And clearly, one of the major reasons that we look at acquisitions are that there's less risk in an acquisition than there is in new product development. In terms of here, you can get an idea. I've seen some of the recent acquisition activity. I know Jamie talked about the last year or so, but we go a little bit longer, and you can see some of the major acquisitions from Gallo and Constellation, Foley, and the Jackson family. And since I'm talking, I put us up on the slide as well in terms of what we've done in acquisitions. And so you continue to see that there's historically the acquisitions have been 20 to 28 per year on average over the last 10 years. And I think you might continue to see that and follow. And the main part that's driving the growth is the price point driven $10 plus category. As you can see, the Constellation is exiting the below $10 category where Gallo continues to dominate. And they're looking at that not for growth but consolidation on Gallo's side. And really the growth, the primary drivers of growth are the $10 plus category. And we're seeing that during COVID as well, and particularly in that $15 to $20 price range. In terms of private equity groups, we have seen some different various private equity groups go into the market. So we look at the Carlyle Group and the things that they've acquired over on a worldwide basis. They've taken a big emphasis in both China and the United States. TSG with the Duckhorn and the recent Costa Brown acquisition, and GI Partners that sold Duckhorn and picked up Farniente. And so you can see significant private equity. And we have we took on two smaller groups, AGR and Sonoma Brands, to support our continued growth. And I think when you're looking at considering the sale, I can't say it enough. You have to be prepared, get everything together. Get your financials put together, bring in some outside help to do it if you need it. But the most important part is to understand your COGS and your margins and your expenses by segment. And if it's a family business, we all understand the family businesses have certain lifestyle things associated with it. And you need to isolate that so a seller that's looking at it can understand what the true opportunities are. And understand your sales channels. Know what your distributor network is, your sales by distributors, where you have contracts, where you don't have contracts. And then again, know all of your contracts, because ideally a buyer is going to look at where the consolidation opportunities are. And the more long-term contracts you have, the less easy it is to consolidate. We also see a lot of times that maybe some shareholders want to sell and some don't. And it's best to resolve all of those issues or family issues internally before you consider a sale, because it helps in the process for you. And I think it's important too that you want to be fact-based in these. You don't want to be emotional. The market is going to really set the trends, and if you're looking at it objectively and fact-based, you're going to find that's going to be better for what you do. And depending on whether you want to do the sale yourself or whether you want to consider professional help, there are plenty of people out there that can do it. It really depends on how you're looking at it. And I'll tell you, in 22 acquisitions, the single acquisition has been the same, but they're always a journey. They always have high points and low points and process related, and sometimes they can take up to 2 years to do. So you just have to be prepared for that, and have to be prepared to try to keep things as confidential as you can. And what we look at acquisitions, or we obviously look at where things for us can be accretive both on our top line and our bottom line, where the EBITDA supports the price revenue. We like brand only deals. We like strong direct to consumer with opportunities to have kind of the right size assets and ability. We'll look at turnaround situations too. The opportunity to consolidate, cost structures within what we do are important. The sweet spot for us in wholesale, we're looking for brands primarily in the $10 to $30 retail, or where they might fit a gap in our portfolio. And clearly we have some gaps in Paso, Robles, and some other kinds of things, and other areas down on the Central Coast. We do look at cash flow and EBITDA, and we prioritize those more over assets. But it's everything. Obviously, Letitia was kind of the other side of that, with pretty heavy asset intensive business, but made a lot of sense for us. And just try to be realistic. We look for sellers that are realistic in their expectations of what's going to happen in a transaction. And we're clearly interested in doing more transactions. So that's kind of how we look at it from Vintage Wine Estates and how we see the market. And I'm happy to answer any questions that you might have.
Great. Thank you, Jenny. Thank you, Pat. As a reminder to everybody, please feel free to put your questions into the Q&A box on the right-hand side, just below the video screen. I have a follow-up question for both of you, actually. The first one goes to Jenny. Do you see vineyard acreage prices changing? You mentioned there's a wide gap between the highest quality and the lowest quality, but do you see that average value fluctuating over the next 12 months?
$1,000 and as low as $19,000 an acre. So overall, though, our averages have been steady and they should stay steady. There's always going to be that gap between the west side and the east side, and a lot of that comes from what the grapes will generate. So in general, will probably be a steady incline in pricing. There's definitely going to be more pricing pressures in the future, but not too drastic.
Great, Pat. And a question for you. You mentioned that Vintage likes branded wines, DTC stable wines. Something that kind of shook up the industry was the sale of Empathy wines. You briefly mentioned that in your presentation. Do you see more acquisitions like that continuing, and a real focus on those DTC only brands?
Well, I think for sure there's the impact of COVID has pivoted a little bit more. A lot of shoppers have learned, a lot of consumers have learned that it is easier to do DTC. We see our DTC business is up over 300%, and we're one of the largest in the country in DTC. I expect that the trends won't stay where they are, but clearly more people are going to emphasize direct to consumer, and you're going to have to be prepared for 2-day delivery anywhere in the country, and you're going to have to be set up for that. And I think it's an important part of everybody's mix to that, and with a focus of understanding what your customer acquisition costs are, because a lot of these startups like Empathy Wines and some others have a very high cost of customer acquisition, which isn't necessarily always sustainable. But I think the DTC part is also important as the wholesalers continue to consolidate. And if you're not going to be, unless you're very, very, very large, you're not going to have the ability to be as reliant on the wholesalers to do the business for you. So DTC is going to be important.
Absolutely. Another question just came in. How are big acquirers viewing brands with vineyards versus without vineyards in terms of acquisition? Is cash flow on brand enough if it's a winery only?
But yeah, absolutely. Every single opportunity looks at it. I mean, vineyards, you can have a balance of owned vineyards, leased vineyards, contracted bulk winery. There are pluses to having vineyards and there are minuses to having vineyards. So every deal is really different when it comes to that.
Great. Do you think that COVID-19 will create a pause in taking the risk of M&A? Unsure valuations with restaurants reeling. Jenny, I think I'll direct that one to you.
I think we've had our pause. It was pretty much dead March, April, and then May the deal started coming and there's more in the pipeline. So the general sense that I'm getting is people are willing to take the risk. They're still active and doing due diligence and moving forward on transactions. So we've already had our pause, is my opinion.
Good. Pat, another question for you. Do you have any suggestions or advice for a winery owner looking to take on a partner versus selling and getting out of the business?
There are opportunities certainly that to find investors willing to do that. It's a harder road to go because generally in those kinds of things, a lot of the people in the broker community or the people M&A activity don't like to do those things as much. So it becomes a little bit more personal on that. But depending on it, I think there's a market for it. I think there's an opportunity to do it. I mean, we continue to see that.
Great, and we have time for one last question, and Jenny, this one's for you. If a winery or vineyard is looking to sell, what are the top 3 things they should do to position themselves to do that?
Good financials, definitely that's important to have that ready to go. And then building a team, I think, is key, just to have good advice, to understand your product that you're selling, understand who those potential buyers are, and pick the right partner in selling that. So my thoughts.
Great, that was super succinct. Thank you for that, because we did have one more question come in, and I think we have time to get to it. Have you seen an increase in out-of-area buyers in the area for vineyard and larger acreage properties without anticipated cash flow on properties as large city money leaves the city and can now successfully work remotely?
Most of those buyers on the larger vineyards tend to be agriculture investors that have experience in investing in agriculture. So the lifestyle buyers and the people coming from the cities are looking for the lifestyle package: a home, a beautiful setting, ideally turnkey. They can just move in and live the dream. So kind of 2 different types of buyers.
Excellent. Thank you, Jenny. Thank you, Pat, for sharing your insights into the M&A market. I got a lot out of that. I was furiously taking notes. Thank you so much for your time.
Thank you.
Thanks, everybody.